Hello and welcome to another edition of the Small Caps podcast. Well, what is the fate of exploration companies around the globe in light of the COVID-19 pandemic? To tell us more, we're joined by Sherif Andrawes, BDO's Head of Global Natural Resources. Sherif, good to have you on the show.
Great to be here, Peter. Good to talk to you.
How exploration companies are faring through this crisis and what they should be doing. I want to speak to you about that in detail, but before we kick it off proper, Sherif, can we start with your role at BDO? It's a global position based in Perth. So what does it cover and what does it entail?
Absolutely. Happy to start there, Peter. BDO, to start with, we're a global accounting firm focusing on tax, audit, corporate finance, those sort of things, with 90,000 staff from 160 odd countries. One of our major focuses around the world is natural resources, and so I'm lucky enough to head that sector up for BDO. And what does that mean, and what does it entail? Well, we cover mining, oil and gas, and renewables in there. My personal focus is on mining, and I really look after all the thought leadership we produce around the world, all the global research, as well as things like making sure that there's a constant level of client service wherever a client is operating around the world. And lots of mining companies, more than many sectors actually, are global enterprises. So it's really quite an important role to make sure that a company that's operating in South America, for example, but has a head office in London, gets the same service around the world. And that's part of my role.
Yes, so no doubt it'll keep you busy, and I suppose you'd be loving the fact that you're in Australia's sunniest capital, but you've got this global role which takes you right around the world. It's business as usual in the Australian mining sector at the moment. It's effectively an essential service. So what about the exploration sector? Where is that now?
That's a good question. Certainly, this role used to take me around the world. There's not so much travel anymore, and that's probably one of the issues to talk about with exploration companies as well. Is that whilst I used to travel around the world and to see a lot of these companies, the companies themselves are struggling for that very reason. I think one of the things that's kind of a good point to start on this is that we do a survey every quarter based on the Appendix 5Bs that exploration companies launch with the ASX. And we've been doing that for many years and produce that and analyzes how much cash exploration companies have got, what they're spending on, how much they've raised, how many companies there are. And what we found recently is it's the market split almost into two. And I mention that because the split's very relevant now. And what we find is that there are companies at the larger end of the exploration sector who actually have been doing quite nicely, have been in the past past year or so raising more money than ever, and have been investing more money than ever. But on the other side, there are companies that at the bottom end of that market, the more junior explorers, who have been doing it a bit tougher and finding it harder. This is pre-COVID-19. So the last survey we did was for the quarterlies that were to December 19. And that was what we're finding then. Now, if you roll forward to now, the quarterly reports that are for March 19 aren't out yet, but what I'm hearing and what I'm expecting is that split's got even bigger. So those companies that are at the bottom end that were struggling before was probably struggling even more than they were, whereas those that are probably the larger type of exploration companies are actually doing quite nicely at the moment.
We had Tony Sage on the show on our last podcast. He's a mining entrepreneur and owner of Perth Glory. He claims the federal government isn't doing enough. He says, and I quote, "Because we are explorers, we have no income. And to get these loans from the banks and to get a JobKeeper, you need to show a 30% drop in your income. As everyone knows who's in the exploration space, we have no income. We raise money in equity and go out and drill and find projects, etc. We really need help. We're trying to keep our geologists and geophysicists and mining engineers on staff, but there is no opportunity for us to do so. We really need the government to tell the banks that raising equity is income." Does he have a point, Sherif?
Absolutely. Tony is quite right in what he says there. I think what the government is trying to do is correct in supporting companies to keep staff on. They've come up with a definition of how they do that, which is around about a reduction in revenue by 30%, which is fine as a concept. As ever, the devil's in the detail. And when the definition of what revenue is for most companies, that's quite simple. That is how much your turnover is reduced. But for exploration companies that don't have revenue, as Tony says, or the definition of revenue, their income actually is equity they raise on market, it isn't captured by the government's definition. So you can call it a loophole or a fault in the design of the definition, but either way, exploration companies suffer because they're not caught by it. And so that is an issue, and Tony's quite right in what he says.
So are you hearing this kind of pain not only across Australia but across the globe? Obviously, Tony wouldn't be alone.
Yeah, absolutely. Right across the globe, it's the same issues at that smaller end of the market. In fact, if anything, Australia is probably in a better position than most, in that we've been hit less by the virus, and our companies were stronger to start with, and our exchange, the ASX, is probably the strongest of all the exchanges at the moment going through in terms of how much is being raised. And so I think as junior explorers in Australia are probably the best place to be, even though it's some of them are struggling.
Well, what can companies do to try and improve their cash flow in light of all these hurdles and hiccups?
Yeah, there are a few things. The immediate thing will be to conserve cash and to stop any discretionary expenditure. And I'm sure all exploration companies have been doing that. Certainly, after the mining construction boom, we saw that admin costs and any discretionary expenditure had been reduced anyway. It was starting to creep up, but I think that's a phase that most companies will have done or are doing already. The next thing to do really is around seeing where money can be raised. And one positive, and it hasn't come from the federal government, but it's come from ASIC, the regulator, is that they've relaxed the rules around capital raisings to make it easier for companies to raise money by increasing the placement capacity limit of 15% to 25%. And allowing an increase in coupled with entitlement offers or share purchase plans. And I think that's been quite well received. That's only for a short period to the end of July, but that's a starting one, and that's been good. I think what another thing we're seeing is for some companies looking at partnerships with larger mining companies, and I think that's something we had seen as a trend in the last couple of years, and I think that's something we will see again more this year.
So, Sherif, how, in light of what you're saying there, in terms of being conservative and cutting your spending, obviously, but how do you get investors involved in this climate? Is it simply a matter of sit and wait and ride out the storm, or what else can we do? Can explorers do to get cash in?
Yeah, it is really horses for courses. So there are some companies that will, if they've got good projects, they're in commodities that people are interested in, and they can attract a big brother. For example, you look at someone like New Century with their zinc project, who've just announced that the IGO has just invested, I think, about 18% in there, and you see the big brothers of that capacity, that size, the larger mid-cap mining exploration companies coming to their aid or seeing it as an opportunity to invest, however you want to term it. I think that's one really good route. Another good route is using these temporary reliefs that ASX and ASIC have put in around increased share purchase plans and entitlement offers. So tapping on your existing shareholders who believe in the company in the first place, and whether if that's really often for survival mode more than anything else, that's one way of doing it. I think that one of the hard things is to demonstrate that the money that's being raised is actually not just for survival, but actually helping the growth of the business going forward. And it's a struggle for some of those exploration companies that, because of internally closed borders, just can't operate. They're the ones in the hardest position of all, I think.
Yeah. So for Australia and I guess if we look at Western Australia right now, the Premier has said that the intra borders, the regional borders will remain in place. The hard borders between WA and the rest of the nation will remain in place. WA is a very big mining-oriented state. There are obviously other borders in other areas of the country as well, but the longer these borders remain, the more difficult it's going to be for any junior or mid-tier explorer to raise capital or equity, whatever, to progress with their operation. So what's the long-term effect as a result of this on the whole industry, Sherif?
Yeah, that is a big issue. You're absolutely right. The internal borders and the interstate borders, I expect, from what the Premier is saying, will be in place for quite a long period of time, which is great in terms of the health outcomes of WA community in particular and other states. But it does cause a real issue for companies in the exploration sector and also mining services sector as well. So there will be a couple of things. One will be, I think, a realignment of trying to use local staff as much as we can where it's possible. There are some areas where that's not possible, and we've seen the likes of Panoramic and Northern Minerals, close down operations in the Kimberley because of the impact on the local Indigenous population or potential impact. For where it is possible, I think we'll see some more of that. I think in some areas, like in the gold fields, there'll be less impact about using local staff as much as they can. But some of the more remote areas is going to be difficult. And so for those companies, they are going to have to look at being either or both sort of just a case of trying to stay alive and looking at just enough money just to keep going until things do change, or looking at alternative possibilities of alternative projects and looking at projects that can be explored right now and money raised for as well. So we might well see some more deals being done of companies coming together. I'm expecting after the next few months to be some more M&A activity of companies coming together to try and find mutual solutions through this.
Are there any particular niche industries within the market that you think are exempt from the impact of COVID-19? For example, we've spoken to a couple of telehealth companies in recent weeks here who have literally raised millions of dollars during the eye of the storm. It seems the telehealth industry has been the exception to the rule. Is that something perhaps that some of these companies may have to necessarily out of necessity rather, have to diverse to raise something that's more of a sure thing, so to speak?
Yeah, I think one of the tools in their armory of many of these companies will be looking at other opportunities. And it may well be something quite different. I'm not sure it'll be all the reverse takeovers that we saw before, because it's a lot harder to do those now under the new ASX rules. But I do seriously think we'll see a lot of companies trying to reinvent themselves, possibly in areas that are more aligned to make it easier in terms of ASX rules. But no doubt companies are going to have to think about all sorts of things like that. And one of the great things that whenever I talk to people about exploration companies in Australia is they're a very resilient community, and they always find a way through somehow. Even how much adversity is thrown at them, they're a very resilient bunch.
Okay. Well, we do hope they are resilient. What about the impact of the lack of exploration and project work on service industries? What's been the impact on that sector now that the drills aren't up and firing and everything's been shut down?
Oh, absolutely. The majority of mining services companies are struggling through this. A lot of it is because of the border closures and inability to access the sites themselves. Coupled with the exploration companies' uncertainty about where they can raise their money. The advantage that mining services companies do have over exploration companies is that they, if they're eligible, will be able to access the JobKeeper allowance, and so can keep staff on and for the period that's available. So that's one advantage they do have. There are some niche mining services companies that are actually doing better than at the moment, which is very few. But there are some I've heard of actually trying to find more staff to manage those that are to do with medical or to do with some of the transport. Or some of the remote working type things. I think what we'll see is some of those exploration companies, some of those services companies that have the staff on with the JobKeeper will spend this time trying to reinvent themselves to face what life might be like in a post-COVID-19 world.
So, coming back to the original theme and subject of our conversation, Sherif, we've discussed and we've heard how exploration companies are faring through the crisis. And you've mentioned about some tactics they should be employing to try and help get through this phase in terms of um, uh, discretional spend and being conservative, I guess, in terms of budgeting. What's going to be the impact across the globe because we're seeing exploration companies come to a grinding halt? What's the worst case scenario out of all this?
What we'd seen even before COVID-19 was a reduction in exploration expenditure, with the fear that there'll be a price to pay in future as fewer new discoveries come online. We'd heard terms of things like peak gold and the like, and what's happening now is exploration expenditure and exploration activity reduces. That only exacerbates that and makes that worse. So there's no doubt that there's going to be a dearth of projects in the coming years as a result of that, and that's something that we need to, as an industry, we need to focus on, trying to make sure that there is still that pipeline of activity and pipeline of projects. 10 years from now, we'll look back and say, well, there was an opportunity missed if we don't do something about that. And that's a message that needs to go out to governments. And also those larger mining companies, the majors, the larger mid-tier ones who have funds and are still making money to invest in some of those juniors to ensure that they have the pipeline of projects going forward. And as I said earlier, we've seen some of that happening in the past, and I think we're going to see that. We need to see that more in this coming period as well.
Is this the time now, Sherif, to invest in greenfields exploration at the government end, given that everything has shut down?
I'd like to say yes, absolutely. That's a great idea. I honestly can't see the government doing that. I'm hopeful that the government will make life easier for exploration companies and help them, but I can't see the government getting too involved in greenfields exploration.
Why do you say that?
I think, without being too cynical, I think that the government is focused, and quite rightly, I suppose, on the number of jobs it can save, and so its focus is going to be on where the big jobs are. Notwithstanding what's happened with Virgin, it's going to be in other areas, the service industries and the like. I suspect we're going to have the state government in WA and state government in Queensland, and also the mining industry itself looking after itself as much as it can at these times.
What does the Sherif Andrawes crystal ball tell you in terms of when things might, when the light starts to appear at the end of the tunnel?
My view is we've got a few phases. The phase we're going through at the moment, and hopefully coming towards the end of that phase, is around about survival for a lot of these companies. The next phase after that will be looking at how they can come out of this more resilient and stronger companies. And it might be, rather than being so dependent on one source of cash flow funds, they diversify those funds, whether it is teaming up with a big brother or changing the way they operate, for example, using more local people, changing supply lines. And I think that by later in this year, and certainly by early 21, we'll see a lot more strength in the markets. I've no doubt about that. I think it may even be earlier. As I said, the ASX, in terms of funding coming through, is quite resilient, and I'm very confident that the larger exploration companies will be, quite safe and strong. It's the smaller ones that will struggle somewhat. And in terms of answering that question in a bit more detail, what we've seen over the last few years is a number of exploration companies reducing. Even pre-COVID-19, we saw them come down from about 850 or 860 5 or 6 years ago through to 651 at the end of December. And I anticipate we'll probably continue that trend of losing 10 to 20 every quarter, and this particular quarter for June may even lose a few more.
What about employment or unemployment, Sherif? That'll only go one way, and it's not down.
It won't be good, I think, for this short period. If we can convince the government around the JobKeeper allowance and having my exploration companies able to apply for that, then that would help no end at all.
That's quite important, isn't it? That some kind of arrangement or negotiation is made around the JobKeeper payment for these exploration companies who are really struggling at the moment to raise capital.
Yeah, absolutely. And the industry bodies and people like us, we're vocal in that and talking to the government and making sure that they just change the definition. And that's all it needs, is change the definition of what turnover is. It's not a wholesale change or saying exploration companies are actively put in. It's about changing that definition of what counts as revenue fall.
What would be the impact? So what would be the consequence if that definition changed? All of a sudden, you'd have a whole industry reactivated, I guess.
Well, absolutely. There's probably 300 or 400 exploration companies that would benefit from that, and then the flow-on effect that goes from that with the drillers and essayists and all these others that support those as well. So I don't know the precise numbers, but there would be quite a big impact.
Now, Sherif, before I let you go, I failed to mention in my intro that you also serve as the chairman of Football West in Western Australia, and obviously sport has also gone into lockdown as a result of COVID-19. What does your crystal ball tell you in terms of when competitive football in WA, at the very least, may restart again? And obviously, you'd be in discussions with your member federations around Australia. So, what's your take on when competitive sport can reactivate, not only in WA but hopefully in Australia at the grassroots level, at the least?
Yeah, absolutely. Now we're in constant discussions with the FFA and the other states as well on this. What we've said, what the FFA has said, is there's no football activity at all until at least until the 31st of May. What I would love to see is community grassroots football start on the 1st of June. I'm not placing any bets on that, but one of the things that gives me comfort is that in terms of the government are making the right noises around about community involvement and mental health and actually getting people back out and playing community sport again. So I'm confident that once restrictions are reduced, that community sport will be one of the first things that'll be allowed to be started again. And that's probably going to be in phases as well. I'm sure that they'll phase it in terms of geographies. Those that are less impacted will be able to start first, but also in terms of levels. So I think that the competitive level, what we call the National Premier League, so the NPL, might be a little bit later. But the junior sport and the way that schools are starting to reopen again, the junior level might be the area that starts first. So I'd love to see that happen as soon as it can, hopefully sometime in June or July.
Well, let's hope a lot of things open and or reopen and reactivate as soon as possible. Obviously, with the best possible health advice. Sherif Andrawes from BDO, thank you very much for your time on the Small Caps podcast today.
Thanks, Peter. It's been a great pleasure.